so on and so forth. We've invested across 34, 35 companies now. We are in fund of $500 million AUM now, and actively investing from our fund three. As a setup, we've got a team in Bombay, we've got a team in Bangalore, we've got a team in Gurgaon. The investment team majorly sits out of Bombay. We've also got a small setup in Singapore. One of the managing partners sits out of Singapore. So that's what we do. We typically like to, invest anywhere between, you could say, 2-3 crores to 50-60 crores. The idea is to continue to back them. Some of the investments which we've done include Purple.com, IVYCap, some of the other companies which I can think about is Clovia, Biryani by Kilo, Zest IoT, Conversite, Bijli, so on and so forth. So a lot of companies in different sectors. So that's a little bit about IVYCap. I'll pause here, and if there are any questions about IVYCap, feel free to ask me. Otherwise, I'll move on and probably talk a little bit about the agenda which we have for the sessions today. Okay, great. So no questions. So I think the agenda of this session is very simple, right? To make you guys aware about what venture capital is, and at the same time, really understand what you need to do to be part of venture capital, and how you could be a venture capitalist for that matter, and what things probably one could think about doing when they are part of venture capital fund or part of a venture capital ecosystem. So just from the basics, I think a lot of people would know what VC is, but just for everybody's benefit, venture capital as a concept has arrived very recently in India. It's arrived probably like 15 years back. I think one of the oldest ecosystem is US, right, in 1980s, where it started, but in India it's in 2000s when it started. The idea is very simple. Yeah, look, venture capital basically helps early stage companies, so to say, to make them more evolved and make them an enterprise, give them funding to solve a problem. I think that is the most important piece. Are you really solving a problem? And which is when VC would come in and invest. There are various stages of venture capital investment, and followed by private equity investment, which we'll come to later. But how it works is that if you've got a very interesting idea, and you would like to build something on it, you would definitely need funds around it. A lot of times, early stage companies don't get funding. They don't get funding from banks or NBFCs. So there are these institutions, or for that matter now, a lot of angels who give you a seed money, give you an initial amount of money to start the business and keep the ball rolling. Which is how it starts. Basically, generally a first round could be an angel round. So you find people in the industry, or people with like-minded attitude around the problem you're solving for, and you raise some money and give a part of your company as form of ownership to them, and continue your business. And this is followed by multiple rounds of investment. You would probably, if somebody is tracking, how the startup ecosystem is evolved, you would see that there is seed, pre-seed, there's pre-series A, series A, series B, C, D, and so on and so forth, and IPO for that matter. So uh, what do we really do, right? I mean, you would be thinking it's such a fancy, fancy task, right? Investing in companies, and probably some of you all would have followed Shark Tank also and would know some ideas. So look, it's not as fancy as it shows on television, right? I mean, it's different from what it looks like. The idea is to understand the problem statement very well, understand how big the market is, understand uh, whether we could do any contribution to the startup and the ecosystem. We not only analyze the company but analyze the industry which you're present in. A lot of times you feel that a lot of times a startup founder feels that okay, there's a real problem statement which he needs to solve for, but later realizes that the problem he's solving for is for probably a niche and not a very big, not a very big set of people, right? So it's important to understand in which industry you're solving this for, and that's how we trickle down. So it's more like, understanding the sector, understanding the industry, understanding understanding the unit economics of the company, and understanding the future aspects of what could happen in this industry or in this company. Now, to do all of this, right? I mean, you can't learn all of this just by reading books. I think, just for everybody's reference, it's important to understand that this comes with a lot of experience, and it comes with a lot of hard work on ground. And when I mean on ground, it means that, not only, doing some Excel or a PPT work, but speaking to a lot of people in this industry today. If somebody comes to you and will ask you that, how do you build a consumer brand, right? There's no right or wrong answer. Something works for, say, a beauty brand, something will not work for a baby brand, right? So it all depends on situation to situation. And so for that, I think it's important to start networking. If you really like venture capital business, you should start networking around with people who've been in VC, or have been in startups, or have, for that matter, been investment bankers also, because they also tend to interact a lot with venture capital funds. So there's nothing like a qualification as such today in the VC world. There's somebody who's an MBA, there's somebody who's an engineer, somebody who's a CA, somebody who's only a CFA. So it doesn't really matter. I think the starting point is right in front of you, which is basically the curiosity which you have. Right, you should start reading about startups. You should start reading about what is really happening in the ecosystem. And I mean, nobody needs to tell you. If you're really interested in it, you could just probably pick up some of these, websites which write a lot about startups, write Your Story, in Tracker, VC Circle, so on and so forth, right? So the idea should be to read everything which is happening in the startup ecosystem, to know what a particular startup does, like what an Oyo does, or what a Flipkart does, or what a Mama does. These are some of the names which are right in the public, but there are 20,000 other people who are solving some problem. So as an assignment to know or learn more, you could probably pick up a sector or pick up a theme which you like. You could think about electric vehicles. You like electric vehicles a lot. You feel there's a future in electric vehicles. Start reading about it. Don't worry about what will this translate into. I think it's important to know what has happened in the last few months or last few years, and what is expected to happen in the next few months and next few years. I think that's the most important piece. I think you should start reading and talking to people. Now, other aspect of this is that, look, since I said, I mean, typically, uh, there's no real qualification, but what we see funds end up doing is that they tend to try to collaborate with different universities, or different, uh, you could say, companies for that matter, or schools or colleges, to get some resources in terms of interns, right? We all understand that, when you're studying till 2021, there's no real practical knowledge about it, right? What is happening in this side of the world. But there is always an overwhelming response, right? And how do you stand out? That is the most important thing, right? It's not that straightforward. So for you to stand out, really, you should start making case studies. You should start making viewpoints about, do you think the Cred's valuation of $6 billion is is correct, not correct, overvalued, undervalued, rightly valued? Create a view around it. And that could only happen if you read things like Little Book by Damodaran, right? Ashwat Damodaran I mean, he was my guiding, you could say, go-to book when during my early days, where I would read about it around valuations, DCFs, and the ways of doing it. So do such things, right? And create case studies. Try to stand out in terms of your inclination. I think most important thing for all of us is that how inclined are you, or how excited are you, or how curious are you about this job, right? And this ecosystem for that matter. So don't think of don't think that, okay, if you do an MBA, or if you do a CA, or if you do a masters, you'll definitely get into VC world, or a PE world. I think if you have the curiosity, reach out to people on LinkedIn, message them. Uh, I mean, it's difficult to crack them, of course, because everybody gets like hundreds of messages. But you have to be consistent with it. Keep following up. Speak to them. Take their time. Go for a coffee. Learn more about them. Learn more about their journey. Try to see what value add you could do, and then start picking up sectors. As I said, if you like something, pick up that sector. Read about it. Reach out to people in that industry. If you find that there's a company which is solving for say you know electric vehicles, but not for cars, but for motorbikes, right? So you could reach out to companies like Okinawa. You could reach out to their founder. You could reach out to a sales head, speak to them, understand what is really happening in this industry. You could reach out to a fund who is invested, right? And talk to them about what could happen in this industry. So a lot of intel comes from there, right? And I think that's very important. This is what, and all of this what I've been saying till now is called primary research, right? Very important to do that. I think secondary research of just sitting on the on the desktop, you will get everything on the Google, but the most finer, I mean, the most important and the finer aspects will be on by learning on the ground, and which is about speaking to people. Now I think this is a good segue to understand what really a VC does, right? I mean, I've been saying that do this, do that, but as a VC, I think one of the most important things is that we are master of none but jack of all, right? So we don't we don't have to be so passionate about one theme and get to know everything, which that typically a founder of a company would do. But it's also very important for us to know the know-hows and to know about what is happening, what is recent, and what could happen in the future, right? So be aware. I think you need to be really aware about what is happening. So for us, I think every time there's some new theme or new startup which is coming up, we tend to read about them. We meet them, we reach out to them, we understand what they're solving for, because otherwise I think it becomes very difficult to cope up and manage, right? The second point is, I think, thorough research and thorough analysis of numbers. I think typically, I mean, if you're from a finance background, you would understand a little bit about numbers, but I think engineers tend to, I mean, in terms of financial numbers, of course, engineers are very good at numbers, but in the terms of financial numbers, you could always do a crash course, or you could always read a little bit about it on YouTube. There's a lot available, right? Example, what is an EBITDA margin, or what is return on capital employed, or what is working capital, right? So start reading about that. If you don't know about that, you will not be able to analyze anything. Start picking up any financial statements. If you know about public markets, you would know that you could get their annual reports very easily on any of these websites, right? And you could take their annual reports, read the annual report, and understand what business they are doing, what are the financials they are looking at, what is the margin, what is the capital employed. If you have queries, go back to YouTube, read again, right? I think that is how you will learn. And if you still have any queries, make few friends, make like-minded people as friends, and speak to them and understand why this and why not that. I think why in this industry is very important. You need to question everything which comes across. uh, I think that's something which you should keep in mind. So start picking that up. I think that's something which really helps to get in. I think the curiosity angle which I was talking about earlier is that if you could present that you know about a certain industry, or if you know about a certain case, and which you believe that one should present, then you should. Like example, in my early days, we used to pick up any random startup and start reading about it and make an hypothesis around uh, what will happen to this startup in the next 2 years, right? and it's not very difficult to do that if you read about it, right? So that's fundamental point, and which is what VCs keep doing. um, Analyze data, and analyze data not from how the, the founders tell us, right? All the founders will always talk much better in terms of their numbers. Try to read between lines, right? And if you want to read between the lines, you need to understand the financial terms and all the matrices, which are generally not taught, right? And you need to have that inclination to learn. And then I think the third important aspect here is that for a venture capitalist, most important thing is exiting the investment. So never be attached to an investment, right? I think you really make money when you exit, not when you invest. Investing is easy. I think building the company along with the founder is difficult, and exiting is the most difficult. So we not only invest, but we help the startups to grow. A lot of startup founders will not have the network, right? It's not easy to have a connect at, say, Reliance Industries, right? Or have a connect at Kotak Bank, at a senior level, of course, not at junior level, or know somebody at Flipkart, because a lot of these are interlinked, right? So you need some help in the marketing, you need help in the human resources, you need help in, uh, for that matter, expansion, finding a retail outlet. So all this aspect, the founder tends to come back to a investor and say that, how can you help us? So for us, it becomes very important to know such people also, and have good relations, and understand how things work in that space or industry or segment. So we also do that. We actually dirty our hands, and we spend time with the founders and see what best is possible. And this is a very patient game, right? It's not something which you do now and you do something and you'll have results in the next 2 days or 2 months, for that matter 2 years also. It is a long term game. You invest in a company, you work with them for 4 to 5 years, hope that the company does well, and then you exit. So different aspects, right? It might sound very exciting from the front, but when you really spend time, it's not that easy and straightforward. So it needs a lot of dedication. I think it's very important to be dedicated, and very important to know that it requires a lot of networking. I think that's a point you should know. I think if you are not into networking with people, if you're not into knowing what is happening in different industries or different funds or different startups, this is not for you. I think it's very important. Like it's not possible to be a VC and be just sitting, on a desk, in an office, without going out and speaking to people and understanding. That happens at later stage, but before that, you need to really solidify the financial aspects in terms of analyzing companies, analyzing industries, doing a top down. So what does a top down mean, right? uh, Top down is basically analyzing the macros of a particular industry, then analyzing what really is happening in this industry, what are the peers, what has happened in different countries, right? Example, India is now at, I would say, at a very interesting spot. It's more like a tipping point where, for the next probably for the next 2 decades, we've got a good runway to become a 15-20 trillion dollar company, right? I mean, people expect that we'll probably be in the next 5 decades the biggest economy. Uh, Now, how will that happen, right? It's not that easy. So you need to understand if the macros are supporting what is happening at the top. Are the jobs increasing? Are the capacity or the spending increasing? If I have to example evaluate a consumer brand, right? If I say, let's evaluate Mama Earth. How would you evaluate it? Think about it, whether the spendings are happening at the India level, at country, then whether the industry is fragmented or concentrated. Are there many players? Is there enough threat? Is there opportunity? Is there any strength in this industry? Is government supporting? Are the regulations supporting? So there are a lot of questions which need to be solved and answered right before making an investment. So are you really up for it? If you're really up for it, start reading. I think that's the whole agenda for me to tell you, right? And I think the third or fourth, or maybe the fourth or fifth point here would be that how do you really do you really exit from VCs if you want to, right, in the future uh, as a young professional. If you do VC for like maybe 2-3 years and now realize that this is not for me, I can tell you that any startup or any um, any investment banker would want you to be on their side, because you've seen a lot of industries, you've seen a lot of you've done a lot of work on the analysis part. You've also seen met a lot of startups. You've understood how strategy works because you are working with founders on a day-to-day basis. So that aspect is very clear. I think it's generally the the route for somebody to become a VC is that they end up starting with maybe something like investment banking, or maybe if not investment banking, just an equity research kind of a role, then investment banking, and then try to get into a venture capital and so on and so forth, right? But I think you should try to during your your course, you should try to do more internships. I think if you do some internships, say at an investment bank, or if you do an internship at VC, like example IVCap gets a lot of interns, right, every year. We also get a lot of analysts every year who are learning and who are spending time with us to learn. Similarly, there are different funds. There's Bloom, I think there's Six, and there are a lot of Indian focus VC funds who do that. Your learning will be more when it comes to Indian VC funds, because they're trying to do a lot more things which you would do when you're in a multinational VC fund. So pick up what you want to focus on, right, and then accordingly manage your time. And exits, as I said, 2 years, 3 years, 4 years. If you spend some time, you don't like it. There are many startups companies who would want to come and welcome you to their enterprise, or you could also become a founder. We've seen so many venture capital funds or P funds, top executives leave and become a founder on their own. So that's another thing which is to be kept in mind. And from somebody who's thinking about starting up, right? And I think it could be very important to understand how do VCs think, right? It's so important, because a lot of times what you see is that founders might have ideas, founders might want to do something very interesting, but don't know how to sell it, right? Or don't know how to think like a VC does. So let's understand also what VC really needs, right? VC would always look at how big the market is, how good the team is. It's so important to build a team. Your 50% of the problems get solved if you have a solid team. And team does not mean that having somebody from IIT or having somebody from IIM. Team also means somebody who has a good chemistry, somebody who can get along very well, somebody who can see highs and lows together. The team is really tested when the things are not good, right? So when things are fine and good, I mean everybody does well. So that's also another important aspect. And third thing is that how will you make money? I think that's something which you need to really explain. And fourth aspect, of course, is do you have the ability to raise more funds? I think for us as investors, we look at this as investing for some period of time, because we want to invest and exit. We don't make money unless we exit. So you need to be a good seller. You need to learn probably how to sell some of these things. So I think these are some of the aspects. I'll pause here, and I mean, I've been I've been on a monologue right now. If there are any questions, I can start taking them up, and yeah, you can take it from there. Janvi, Ananya, Gokul. I mean, how do you guys want to do this? I see some.
Yes,
Hello, sir.
just a minute. For those who've raised their hand, I've enabled the mic. You can go ahead asking your doubt.
Hello, sir. My name is Anand Gupta.
Hello.
Sir. I just want to know, sir, do you make a small investment like around 40 to 50 lakh? Like if a college student need a money around 40 to 50 lakh to grow their startup or business, so do you help us in that?
See, of course, I think uh, as I said, we we come an early stage, right? So right from when the company has just started up and is trying to find product market fit, or trying to get the ball rolling, we do come up at that stage. But when it comes to 40-50 lakhs, I think we'll have to see. I mean, we've got a team which looks at early stage investments. I think for us, a minimum check size is at least 1-2 crores. 40-50 lakhs is a little less, because you'd appreciate for us to also spend time. We need to have enough stake in the company. Also, we need to ensure that this company can become big. For 40-50 lakhs, Anand, I would suggest that one should go to angels, because it's easier, it's faster. They will help you to prepare for institutions. It's important to know that the startup needs to be prepared to get a venture capital on board, because if you're getting venture capital on your side, that also means that you are ready to take up for the processes, you're ready to take up for all the compliances, you're ready to do all the work which a typical uh, well grown startup would do. Getting it very early becomes a little difficult to handle. Uh, so I would say that try to take some money from the angels who would help you to become more savvy, and then probably raise money from institutions.
So how to connect with them means if there any procedure, how to connect with the
Yeah, so it's Anand. I think there's no right or wrong way of connecting to anybody, right? So if example, if you if you if you start reaching out to people, I can tell you that if you reach out to 100 people on LinkedIn, probably two or three will you'll end up having a conversation with. Uh, but you need to keep doing that. I think, see, problem is that everybody wants to start up, right? Everybody wants to do something on own and want to raise funds. uh, but you need to start meeting people. We meet one person that and ask that person to connect you to two more people, and then keep doing that, right? And sometimes cold mailing also works. I mean, mail to people who you want to reach out to, right? uh, I know the chances are low, the chances are very low, but that's a good starting point, right? It's something which you can start with. There is nothing specific like a forum, right? Where or a directory where you will get all the stuff, or the angels contact details, and you could easily reach out, right? There's nothing like that. I mean, anybody and everybody could be an angel. So for you, it is also important to know which angel does investments in which sectors, right? So you have to again read and find out. Okay, if you like Anupam Mittal example, you should find out
yes,
what investments has he done, which sectors has he invested in. Do you think he will probably invest in sector which you are building up? You should answer that question, because see, as a startup founder, you have limited time. If you go to a founder who does not invest in say consumer brands or D2C brands, then no point wasting time on it. And that intel nobody's going to give you unless you read and talk to people.
thank you sir, thank you sir.
Hello, sir, Aashish, sir.
Hello.
Sir, I just wanted to know how do you know when to exit? Like you should exit.
Yeah.
You decide when should I exit in the next round, see next funding round, or should we exit through an IPO? Or what are the prospects you see in a startup that lead you to know when should we exit as a VC firm?
A very good question. I think see this there's always a conundrum which a VC goes through, right? That is it a good time? And I can tell you that you cannot time it. You will never be able to time it. I think for every fund has a certain threshold, which or certain IRR expectations or return expectations which they have when they're investing in a company, right? Secondly, it is a confidence which you have on that company. I think if you were an investor in Flipkart and you would have and if you would have sold the stake at 100 million valuation, you would be a fool, right? Because the scope of that company was very, very deep and high, right? You knew that it's a big space, it's a big industry. The founders are very dedicated. You could probably double down. In fact, you could invest more and keep going on till the time you feel that, okay, now is the good time to exit because you've achieved a certain IRR or certain return. So you can't say, example, if you would have tracked 2021 of after COVID, there was a lot of investments which were happening, and startups were getting valued very, very highly. Some of them, we saw about 40, 50 unicorns in that just particular 1 year. Some of them were overvalued. Some of them were, I don't know why were they even valued. So that keeps happening, and these are cycles which everybody goes through, right? So it's important to first think what kind of returns you want, right? If you want a 20% return, I can tell you that, after maybe one round or two rounds of investment, you could exit. But if you feel that, okay, this company is probably going to be like a multi-bagger, you want to stick around for a long time, you could in fact keep investing unless you have a requirement of exiting. So that is the first point. Second point is, also let's understand, venture capital funds have a limited time to exist. So when I say that, it means that we invest from different vehicles, different structures, different entities. So every fund has a life of, I would say, 8 to 12 years, right? So because it's also regulated, all the venture capital funds are also regulated by SEBI, etc. So you need to know whether you have enough time to continue to stay invested, or now you need to exit because it's been like 8 years, and now I don't know if I can still stick around because I need to give an exit to my investors, and whatever the return is, let's take it, right? So it all becomes very situational. So it's always said that the companies who get investors in the early days or early years of a VC fund's life cycle end up seeing those investors to stick around with them for longer because they don't have any burden or any requirement of exiting. And the third thing is that you also need to see if similar business models have done well in US, right? Example, Amazon did extremely well in US, right? It's a 2 to 3 trillion dollar company. Uh, Anybody selling, as I said, Flipkart at $100 million would have been stupid, right? So you know that this can become very big. Now, taking another example, something like Byju's, right? Byju's, I mean, at some point it was the biggest edtech company, but for a lot of people, it was for FOMO. I mean, it was like, I don't know how big this can become, but probably will become big because there was no comparison. People were getting greedy, so you have to avoid all of that. I think that's how I would put it.
And so, like you just said, that you have to know that how that big mark how big that market is. So, like Zest Money, which recently which will be shutting down its operations, the buy now pay later industry is also very huge. But still in India, where I saw in a LinkedIn post that Zest Money has a customer acquisition cost very high. So, do you think that being that industry very large still supports that business can grow?
See, look, I mean, see, let's understand first buy now pay later, right? Buy now pay later is highly regulated, right? First of all, it's regulated by our government. Secondly, we have to understand that it has not done well in other economies, right? If you compare with China, US, it has not done that well. There was a peak and then it fell down significantly. I think even P2P, peer-to-peer lending, did the same thing, right? There were successes, but then there were very bad downfalls also. Now, third point. Of course, it's a very big industry, and of course, there's a lot of scope. But that is not the only way of investing, right? I think the other 2 or 3 points which I mentioned earlier is also to see if the company has good unit economics and company will be able to make money, right? Or the founders are motivated? Are they getting along well? In the times of low, are they able to come out of it? I think there were other problems also, right? It was just money. That was not the only problem, right? There were other things which didn't work out. I mean, the unit economics just didn't work out. You said the marketing cost was so high. If you spend, say 1,000 rupees for marketing cost, and to acquire a customer, that means that your selling price needs to be much higher than that. Otherwise you will never make money, right? And fintech especially is a low margin business. It's more like commission or a payment gateway, or for that matter, if you're doing lending, then it's a 3 to 4%, or depending on how you're sourcing your debt and how you're giving the debt, 3 to 4% interest margin business. So if your margins are low, then your costs have to be significantly low, so your unit economics makes sense. So you have to look at it from the entirety of it. You cannot just look at it, if the industry is big, it should have done well, right? You have to see whether unit economics made sense, whether the founders were getting along really well, whether this has done well globally and has similar trades, and are the regulations very seamless, so on and so forth.
Okay, thank you, sir.
Hello, sir. A very good morning. Uh, like, I would like to ask, how do you assess the Indian market in terms of generating profits? We know that in the Indian market is being the companies around the world are trying to get access to Indian market, but we see that they are not, the companies here are not generating profits. So, how do VCs assess this situation? And are there ways to break into US and American market as an Indian startup?
Sure. See, I think good question, Aryan. I think Indian economy, frankly, has evolved also quite a bit, right? And as I said, the whole VC ecosystem is a very new phenomena when compared to other economies. It is more like a last maybe 10 to 15 years phenomena. So let's understand historically what Indian companies have done, right? If you look at some of the companies today, are throwing pads and ROCs, which are, some of the companies are like Asian Paints and Reliance Industries and Batas of the world and Marutis of the world, have been consistently performing really well, right? But these are old school businesses. These were the need of the hour for 1990s and 2000s, right? Because these were basically solving for basic necessities. Post 2010, and more so post the whole 2008 collapse, right? Things started evolving a lot more, and especially on the tech front. I think because people realize that manual work needs to be reduced, more of tech needs to be added, and more disruption is needed in the businesses. And then Geo happened. I think post Geo, in going 2015-16, everything changed, right? The cost of servicing, cost of data was cheap, uh, access to it was very easy. So people started spending a lot more time, right, on all of these things, right? But the important aspect is that while you're bridging the gap of 50 years into 5 years, you will have to do different things. Like ITC has been building brands for decades. Mama Earth is like 5 6 years old, right? Or for that matter, Nika, which or Purple.com, which are 10 12 years old. If you want to build the gap, bridge the gap so fast, you will have to do things very differently, and that would mean you have to grow faster. And if you grow faster, that would mean that you have to spend more. So the important aspect is, in long run, can you become profitable? Initially, you might have losses, and your CACs might be higher, and it will be difficult for you to maintain. But uh, will 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 the unit economics make sense after a few years, 5 years, 6 years? And many of them will represent that, or misunderstand that, for that matter. But as a VC, that's your job to know that, okay, this might happen, this might not happen, right? In India, of course, I think 85-90% of the startups are loss making. A few of them are profitable, and we are also seeing that some of them are moving towards that direction, especially after what has happened in the last one or 1.5 year, where there's a pending funding crunch, which is what we're calling winter, which is going on, right? So it's important in the long run. I think that's the takeaway for you. And also, second thing on the US aspect, see, look, of course, I mean, a lot of startups have gone to US and raised money. A lot of SaaS companies, software companies, which are started in India, are building for US. People in US spend more. The GDP per capita or the consumer discretionary spend per capita is much higher. So people build in India because we've got the expertise, we've got the cost of services quite low. So we end up doing it much better and much economically. So lot of startups have gone to US, done business in US, have raised money also in US. So as I said, people going from India to US, they don't know people, but they just go there, start networking, start meeting people, and get it resolved. And we've seen that happening. Like, I mean, everybody knows about Zepto. Zepto raised so much money from US, right? If you look at Zepto's, if you guys ever get time, if you look at Zepto's investor list, I think 80% of the investors are outside India. So it's very interesting to see that Zepto, which was started by a 19-year-old boy, two 19-year-old boys have gone to US and raised money. So it is important to understand that such things can happen. You just need to know and probably go in the right direction. Also, there are these incubators and accelerators and likes of YC, which are there across the globe. You could apply for it. You could get access to them, and then you'll be able to raise funds.
That was a nice answer, sir. I have a small follow-up. When you evaluate the startups in a longer run, the Indian consumers are quite price sensitive, and setting up there without burning a lot of money, and even in longer run you would have to like give them like some subsidy type of thing. So in even longer run, can we be optimistic about generating good profits in the Indian ecosystem?
I think it all depends on the sector you are in, right? So let's take an example. Let's take an example of pets food and services market. I mean, it's so intuitive that people are getting more pets. People will spend so much on their pets, just like how it has happened in the past. But you also need to understand that, look, I mean, we are still very early, right? We have, I think, 1.5, 2 crores pet in India, but the consumer behavior is very different in India, right? The consumers, the pet owners today give the same food which they eat to their pets, right? Unlike in US, and US, they have specific food, specific services, specific daycares, specific doctors, everything, right? So people tend to spend more there, right? So some sectors, it is very difficult to predict. I would say it's very difficult to say that in long term it might or might not happen. But some sectors which are like e-commerce sectors, or which are logistics, which are consumer brands spending, like example, beauty, personal beauty care, right? We know everybody is moving in that direction. People like beauty products. People are sensitive, as you said, price sensitive. They like good product and good price. Some of the sectors will do well in the long run, right? And they are doing well. So if you would have evaluated Nike or Purple, say 5-6 years back, the bet you had to take, or the investment you had to make, was whether people will continue to buy these, and people did, because that's a trend which people are believing in. So I think you can't just state India as whole. I think you'll have to look at sectors. It has to be sector specific. Just like some of the sectors I mentioned, or maybe some of other sectors like EV also, which we spoke about. India is very early in EV, but there is a promising start. A lot is happening. If you see today, people are using electric vehicles, right? So, but the other problem in India is the infrastructure. We don't have the infrastructure. We don't have the stations. We don't have not enough manufacturing capabilities for batteries, etc. So it will take time. So the gestation period is what we call is going to be longer in, say, in a pet foods and services versus a beauty care or personal care services business. So the losses might be higher there versus the second one which I mentioned. But it all again depends on what kind of investor are you. Are you going to be there for 10 years? Are you going to be there for 5 years? So it depends on that.
Thank you, sir. It was nice talking to you.
Likewise.
The IV cap,
So we have
IV.
multiple doubts in chat as well. So do you want to clarify all of them now, or perhaps in intervals? Or
Okay, happy to do that.
uh, I'm sorry, Hemant. I think you were asking a doubt. You can go ahead.
Yeah, sorry for interrupting, Janvi. And sir, I just wanted to ask that Camp Ventures is a sector agnostic firm or a sector specific firm?
Is sector agnostic. How do you screen investment application? Is it top-down method the only method which you prefer? No, I don't think so, Himanshu. I think we don't do only top-down. We also, have other ways of looking at it. I think look, uh, it's. I think there are 4-5 pillars to screening investment ideas, right? And some of them I've spoken about in terms of size of the industry, unit economics, the founder profile, whether there is the capability of building a team, and whether there is a future to this company, right? And that happens a lot more by speaking to the founder, analyzing the data. I don't think so. It's only a top down. It's sometimes bottoms up also, where you like a particular product and you feel that okay, this product could sell in XYZ region, and you would want some company to build this up. How would that happen? So it all depends on the company. My doubt is that we what are your insights on a startup focusing reskilling and giving employment to ex-services men, armed forces, as due to recent recruitment person nearly there will be huge amount of discipline. Uh, no, absolutely, it's a very interesting thought, but I think again, this needs a dedicated focus on ensuring that you have enough supply for the right recruiters and enough demand. When you're building a startup, I think you need to understand that you need to solve for not only demand, but you need to solve for supply also at the same time. Your supply could be the right recruiters, and the recruiters would end up being more from the armed forces, right? And somebody who, or would be otherwise, but somebody who wants to spend time on this. EdTech especially has been around for a while and is doing well, and we feel a lot more will happen in EdTech. But you'll have to again see whether the market is huge. Is the market big enough? How many armed forces uh, would want to, reskill or would want to get employment is also a question. A lot of them don't want to. I know there are a lot of people who want to. So you have to figure out whether there's an enough TAM, SAM, and SOM, which is something which you guys should definitely look at when you're evaluating an industry. See, it's very easy to say that in India is such a big economy. It's going to grow to $20 trillion in the probably next few decades. Everything is going to grow, right? I mean, there's no problem for market size for any company, right? Technically, even if you're selling, undergarments, or whether you're selling a cap, or whether you're selling a bag, or whether you're selling a phone, there's market for everything. But it's important to know whether you can obtain that market, how much of that can be obtained, how much of that can be addressed, and how much of that can be captured really, right? So need to kind of do that kind of a math, and that needs to be more hands on. Do companies sometimes go public through IPO just because investors want to exit from the company or want to I think see look, VC investors, as I said, they have a limited lifetime in terms of the vehicle they are investing in. It happens, but not so often. I think when you're going for IPO, I think there are a lot of things which are already done with in terms of governance, in terms of compliance. I think the founder needs to be ready. See, frankly, if the founder and the founding team is not ready, no fund can really do anything, right? I mean, if you go for IPO without the founder's consent, I can tell you, public market investors will discount you left, right, center, and you're not going to get a good listing. So I think it is like, you need to go hand in hand, and it can only happen if the company also wants to go IPO. Recovery of investments. See, look, there are various ways of doing that. I think you can, if your company is doing well, you could also sell it to another investor. There are a lot of investors who would uh, who would who would want to, like, buy the stake if the company is doing well. So I don't think so. It's always that way. Maybe seldom it happens, but that also happens only if the founder agrees. How do you ensure that the valuation and equity structure negotiated during the investment accurately reflect the potential risk? There's no scientific method here. I can tell you, Santosh, there's nothing which you could say is right or wrong in investing. I can tell you that when Zepto was launched, there was Big Basket, there was Dunzo, there was Swiggy, there was Zomato, there was Food Panda. There were so many players, right? Who were doing grocery, who were doing food. People were doing a lot of things, right? The point is, I think you will never be able to assess it to the T. It's not a mathematical question that you need to know what is X and what is Y, right? Uh, I think it's more on also a lot of intuitive understanding, which will come only through experience, right? That whether this will do well or this will not do well in terms of your potential risk and upside. Of course, you will put a lot of research on it, you will understand it, you will put a lot of structures, you'll see what return can be made, you'll see public market multiples to see what possible risk you could have, or what possible exits you could have. But there's no accuracy in it, right? I can tell you that nobody will be able to tell you that, okay, it's 100% accurate, this is the risk and this is the upside I will get. There will always be if and but, because since it's a business, right, there will be highs and lows, so that will always happen. Okay.
Hello, sir. Uh, Sir, I wanted to ask a question. It is not related to your PC firm, but I just wanted to ask. You were talking about EVs, like electric
Sorry,
vehicles.
there's a lot of disturbance.
Am I audible?
Yeah, I'm audible now.
Oh, okay. So you were talking about electric vehicles, right? So do you think if we had better infrastructure before bringing the technology itself, like bringing the electric vehicles or introducing it to the industry, so would it be like a better adaptation in India? Just a
Uh,
question.
Absolutely, I think, which is what I said, the gestation period will be high, I think, for electric vehicles also. See, look, there is adoption for electric vehicles. Definitely, I can see it around every day, and I can see so many startups being funded also and doing some good job. Okinawa was something which I recently read was doing extremely well, some 800,000 crores. Uh, the point is that the potential of this is not some few hundred crores. The potential is probably like 50,000 crores, 1 lakh crore, right? But that can only happen if your infrastructure is solid and strong. Uh, today in one charge, you would on a two-wheeler you would probably be able to go to 50 100 kilometers, or maybe some of the vehicles 200 300 kilometers. Apart from what these of course the companies say, you end up doing in that range, right? That's still very less, right? On the cars, again, I mean, you want to go from one city to another city, your highways need to be like very well built for electric vehicles, right? So I think the lacking piece for EV is definitely the infrastructure, and the EV is also, of course, about battery technology today. A lot of time and effort has been spent on that, and people are doing a lot more. My personal belief is that it will take time. There's a longer gestation here, probably few years before the infrastructure improves, and then you would see that EV is exploding as a sector.
And so also, like we have seen that consumer products, they usually sometimes there are some products which say like environment and there's like sustainable products, but we have seen that people don't really buy them for the reasons of being green or being environment friendly products. So are these type of startups really funded in India, or are they having, like, they're obviously funded, but do they have a future in India right now?
See, sustainability is not a trend. I can tell you, it's an habit, right? And habits will take time and a lot of time. So it all depends. It will all come from how much you care about the ecosystem and how much you care about global warming and all of that. Then that's when the sustainability as a consumer will impact you, and you will then eventually start looking for sustainable products, right? In India, there are few startups. I think I've met a lot of them who are building for sustainable products. Some of them doing well, but I believe that it's still early. I think sustainable products is early, but a lot of effort I think has been made on it. As a fund, also we are pro that. I think we have our own policy around sustainable goals and ESG. We follow that. I think we're very much impact oriented. So it's going to happen in the next few years, but it will take time.
Hey guys,
Thank you
Ashish
so
had
much.
a has a hard stop at 12:30, so let's have like one or two more questions and we will conclude the session.
Yeah, I think there are some messages still in the chat. Maybe I could
Sure.
answer them. Can you count some challenges in VC firms and how do you address these? Okay. See, look, I mean, some of the challenges, most important challenge is staying away from FOMO. I think a lot of VC funds go through that, right? You feel there's a fear of missing out on investing in a particular trend, theme. It is so important to realize that you're not investing for 6 months or 12 months, you're investing for long term. So, how do you address it, right? I mean, you have to be very patient. You have to be very confident about what your thesis is and how you're going to solve for it. And that good companies get funded, good times and bad times, right? So, you have to look out for them. Keep your core and belief very strong. I think you need to know that what are these 5 pillars you want to look for in a startup. Focus on them, keep that track on, because end of the day, you are going to be able to raise a bigger fund only if your returns are good, not because you've invested in a good company, right? I think your exits are very important. So I think right from the bottom to the top in the organization, the focus should be that invest in good fundamental companies. Stay out of the FOMO, stay out of the chase, and that happens a lot in VC. Right. Second thing would be the biases, right? I think everybody comes from a certain experience, investing experience in the VC firms, and we've seen some good investments, bad investments. We believe that okay, we've invested in a certain theme, and if the similar theme is coming up, we should not look at it, or it has not done well in the past, it will not do well. I think that's something which we all try to address, right? We try to say that look, the times have changed. If you would have built a Zepto in 2010, uh, you know, I think it would not make sense at all, right? But if you're building Zepto now, it makes sense. And I don't know if it will do well or no. I'm not commenting on that, but I'm just giving you a comparison, right? So if you would have looked at a grocery startup back then, you would be like, okay, very iffy. Like Grofers and Big Basket were already there. How will it do well, etc. But things have changed, I think. So you have to be very open. I think these are some of the challenges which I think all VCs go through, and we try to address it by being more open and patient. How VC identify if a startup is overvalued? Oh, it's a it's a very tricky question. As I said, there's no right wrong. There's no over under. Valuation is always subjective. It is a way of looking at it. Frankly, one VC firm can think a value of the company is 10, but another might think it is 15. And it boils down to what return expectation you have, right? You might think that, okay, my return expectation as a fund is 30%, but some other person will think it's my 15% return would be great. So he can enter at a higher valuation also. And it might look overvalued to me, but it is not overvalued to him. So it all depends. Yeah, there's no right or wrong. It all depends on your internal dynamics, and also at the same time, there are a lot of investments you've done in the past, and you've seen when you try to exit what kind of multiples you get or what kind of valuation you get, right? So you take some inferences from there and try to put all the experience in the new startup which you're looking at, and it's just public market sometimes which helps, right? If I'm trying to build something in chemical industry, and I invest at say 20x of revenue when I know I'm never going to get that in public markets or at later stage of funding, then I would never go ahead with that because I have to keep that in mind. Sorry, I
Pratik,
think
you can ask your doubt. We'll be concluding after this question.
yeah.
Yeah. So Ashish, I'm Pratik. I'm a pre-final year undergraduate student here at IIT VHU. And my question to you is like, for example, if we observe the beauty care market in India, right? So in the last 10 years, it has moved from a very generic form to now people subscribing to the likes of Minimalix and the companies such as Mama Earth, who have specific and like they are getting more niche into the audience regarding the problems of skin or say dermatological problems. So back in say 2012, nobody could have predicted that India being a very low trust society, and we were already using all these FMCG goods like Fair and Lovely and all these creams, could have moved to a niche market where people are like identifying exact problems with the skin and buying products according to them. So this is a like a very macro movement according to me. And how could VCs like pinpoint these kinds of trends, and what are the levers that you usually decide that you need to invest in these sectors?
See, I think trend identification is a very important role of a VC. I think, and that again is not written in any book. Unfortunately, it only comes with experience and with talking to people and reading. I think that's how it happens. How could you identify something if that's not happening in India? There are multiple ways. One is, of course, as I mentioned earlier, to see what has happened in US, China, Korea, other developed countries, and how things have evolved. Second could be to intuitively understand that, example, somebody is buying worth 10 rupees products tomorrow. Then year two they bought 15 rupees, then they bought 20 rupees. That means people are accepting it, right? People are accepting e-commerce. E-commerce started with Flipkart, eBay, etc. Then it went ahead with Nika, then Purple, and then there were now vertical brands which are coming up. Vertical marketplaces are coming up because the maturity of the consumer is increasing. Today, you're more mature to buy it from a random website. Right? Earlier, you would not buy it. You would only go to Flipkart or Amazon. Now you would probably you spoke about Minimalist, right? Minimalist, they've bootstrapped the business, reached 400 odd crores of revenue in no time, right? Uh, that only happens with a certain kind of experience. I mean, if you have experience in this industry, say if you have experience in BPC, then you would know about it, and a founder will able to come and tell us that look, this is what I feel will happen. Now, as a VC, you will need to probably think twice whether this will happen or no. You have to take a bet. You have to speak to more people. You have to speak to people in the industry. You have to speak to people who've built brands in the past, and and think and brainstorm whether this can happen. See, nobody can predict future. There's certain probability, whether there's a probability of 70%, 60%, 80% of this happening, right? So that's a bet you would eventually end up taking. Like Zepto. Sorry, I'm coming back to Zepto because it's a very interesting phenomena which has happened in the last 2-3 years, right? Instant commerce, quick commerce. Nobody thought that I want my potatoes in the 10 minutes or my bread in like 5 minutes, right? But now people are liking it. People are adopting it. People want it quickly. So it's all about a trend which you believe in. A lot of people didn't invest in Zepto, but others invested. So it's very subjective. Yeah, it's a viewpoint which you have to create, and which is what I said. You need to have a view for things which are happening around you. You might have a view which is very different from mine, but you need to have a view.
Thanks,
Yeah,
Ashish. So
that
Um,
we'll
I just
hold.
have a like on this. Like it's not a big question, but I'm just like stop me if I'm going wrong or generalizing it more than what it is. But can we say that if the purchasing power of a nation goes up, say in a decade or two, can we like automatically imply that niche tranches of audience like buyers are going to open up?
Uh, Give me example of that. I mean, which context are you saying?
Yeah. For example, just as I spoke about Fair and Lovely, we moving from Fair and Lovely to all these niche uh, beauty care brands, right? And there have been things like, for example, green yeah organic vegetables markets opening up. Now
I mean,
people want pesticide.
you are answering it itself. I mean, if you're moving towards it, then yes.
Is it a very general statement? Is it right to say if we can say that if the PPP of a nation goes up gradually, then we can say that niche tranches of audiences are opening up?
Yes and no. I think it also depends on the maturity of a consumer. That does not only happen from PPP. It also happens from the adoption of e-commerce, adoption of new brands, right? See, I mean, PPP increasing also definitely helps luxury brands, but does not mean that it helps new age brands. There's a difference. Uh, a maturity of consumer has improved significantly in India thanks to Geo and thanks to social media and thanks to all the marketing geniuses we have in the industry. So I think that confidence takes time and it's not directly linked, but yes, there is a there is you could say correlation to it for sure because people have more money to spend, right? People have more liberty to try and test it. So earlier, if you had 100, you would spend on your necessities, and then you would have 10, 20 rupees you would want to spend on something which you're definitely sure about, not something new. But now, if you have 30 in hands, you probably would think, yeah, okay, let me try that out.
Thanks, Ashish, for answering. Answers my question. Thanks for connecting.
Likewise.
Yes, I think so. This concludes today's session on career opportunities in venture capital. On behalf of the ESL team, I would like to express my gratitude to Ashish sir for taking time out of his schedule to join us today. Your insights have definitely enlightened us. Also, thank you to all the attendees who were present for today's session. Stay connected for the upcoming sessions and have a great day ahead.
Thank you. Appreciate.
Thank you.
thank you all.